And Tom, I don't know if I need to ask you for like a specific price target on Nvidia at this point, but that was the market leadership until this summer when it broke down. What do we need from it at this point?
Well, I mean, Nvidia is still at the center of the entire transformation that's coming with AI, and Nvidia continues to be one of the leading companies. So, from a long-term investor perspective, I think anyone should look at Nvidia's congestion and consolidation as opportunities to add if they don't have exposure. And then I think for anyone else, it's just a time to be patient because, of course, stocks don't just go straight up.
We'll go. There are a couple stocks, however, moving higher. Nvidia is up about 3%. Yes, almost 3%. The company hosting a three-day summit in Washington starting today. It's up 25% over the past month. That move has pushed its market cap back up above $3 trillion and passed Microsoft into second place behind just Apple.
In a world where technology gallops at a pace faster than a stock market bull on Wall Street, there's a seismic shift capturing everyone's attention. Artificial intelligence is shaking up the status quo. News is abuzz as AI propels us towards what many are hailing as the fourth industrial revolution. Enter Nvidia, the trailblazing titan in graphic processing units, or GPUs, capable of powering our AI-laden future. A household name in the stock market, Nvidia continues to ride high on the magic carpet of exponential growth. Partnered with Taiwan's semiconductor manufacturing company, another heavy hitter in the realm of advanced processors, the duo seems poised for yet another milestone moment. As Nvidia nudges its market cap closer to a staggering multi-trillion-dollar valuation, industry insiders and investors alike can't help but speculate. Are we witnessing the dawn of a new era in technology and finance? Welcome back, everyone, to Investocracy.
In a week where we're poised for a lot of semiconductor news, whether it is Nvidia speaking down in DC or AMD with its event, obviously this update with Supermicro. I mean, is there still a trade to be had there? Are there still gains to be had in the sector?
I think, again, you're going to have to pick stocks. So I think with Nvidia, it's not going to surprise me to see that hit new all-time record highs before the end of the year. Because Blackwell, in a weird way, the fact that it's been delayed is good for them because nobody wants to get out of line and miss getting those chips because they're 2 to 3 times more powerful than the current generation of chips out there. So we like quite a, in what might seem counterintuitive, we like Nvidia actually through year end because of that. Now, I've been pretty open about saying I think there's going to be an AI digestion phase coming. I think it's going to happen in the first half of 2025. I think you're going to have a big problem when that occurs because you haven't seen revenues for the companies spending all of this money on AI go up. They've all gone down. What do I mean by that? Google, Microsoft, Amazon, 3 of the 4 biggest spenders on AI infrastructure after they reported the June quarter, all of their forward revenue estimates went down. And that's why those stocks had some issues. So unless you see all this spending translate into revenues, you're going to get a digestion phase. And by the way, that happened after COVID. NVIDIA's revenues went from being up over 80% year over year to being down over 20% year over year as these same customers digested all of the COVID spend. So NVIDIA is kind of complicated, but in the short term, I think there's a good shot you see new record highs before the year is over.
As their names echo through both Silicon Valley and Wall Street, Nvidia and TSMC have emerged as pivotal players in the AI revolution. Nvidia, with its cutting-edge GPUs, is primed not just to surf the wave of AI, but to choreograph its every ebb and flow. Its CEO, Jensen Huang, characterizes demand for their forthcoming Blackwell architecture as insane. And who can argue with the numbers? Morgan Stanley, analysts anticipate Nvidia will rattle in $10 billion from Blackwell chips during the fiscal 2025 fourth quarter alone. Now, that's enough cheddar to make even the savviest of investors grin like a Cheshire cat. A glimpse at Nvidia's historical success reveals its wonder-working magic. Its stock boasts astonishing gains of over 32,770% over the past decade, a crescendo worthy of the most euphoric financial symphonies. Yet, the symphony doesn't just play Nvidia's tune. Deep within the fabric that knits these triumphs together stands TSMC, the world's semiconductor juggernaut. Producing an estimated 90% of the world's most sophisticated processors, and with Nvidia as one of its prime consumers, TSMC's annual revenue growth, forecasted at 39% this year, bodes well for its key client. It's the Midas touch for Nvidia, a financial golden ticket. Drawing from both companies' alignment, TSMC's upcoming quarterly report stands as a beacon, a harbinger of Nvidia's near-term fortunes. While TSMC provides the clay, Nvidia molds it into legacy-defining architecture. But investors, beware. While Nvidia's price-to-sales ratio peaked at 46, be sure your investment choices aren't mirroring your breakfast. Both shouldn't be toast. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Can we make new highs if tech doesn't resume its leadership role in anywhere close to the degree that it had?
As long as tech is a market perform, if tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like Nvidia and Tesla recently, is that that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah, what about the broadening trade? I mean, look, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now, but I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
And you're still not necessarily sticking with the 50% up for small caps, but you still think they could have a huge move because they tend to move quickly.
That's right. I think what investors have to remember is small caps have been out of favor a long time, and they are known for having explosive rallies that are not abnormal. So last year was a 27% rally over really 20 trading days. I think we could see something very big between now and year end. I was hoping it would be after the Fed started the rate easing cycle, but maybe it really has to happen after Election Day. But are the fundamentals getting stronger for small caps? Absolutely, because interest rates are falling, merger activity likely picks up, and the median PE of a Russell 2000 stock is 10 times, 10.7 times. I mean, that's not demanding, especially if we're trying to be sensitive to valuation.
Within this relentless forward momentum, AI chips, which have spellbound Nvidia's revenue streams, now capitalize 87% of its business operations. Gartner's forecasts suggest AI chip demand will escalate by 33% in 2024, augmenting Nvidia's revenue to soar to celestial heights. This dance with success is threaded through a market stranglehold, an estimated 88% share of GPU spending, a molding industry where Nvidia holds the conductor's baton. But here lies the quintessential question. Could Nvidia touch the stratospheric $10 trillion valuation mark within the next 5 years? The narrative, backed by esteemed analysts, predicts an optimistic ascent. Even if Nvidia's market footing were to soften slightly, it's the rising tide of the AI domain that could lift all boats, or in this case, GPUs. As social media ignites and investors' forums buzz, a tweet compares Nvidia's stock to a must-have tech-savvy phone, expensive, mostly reliable, and planned obsolescence-proof with regular updates. It encapsulates Nvidia's essence, a continuously upgrading triumph in the marathon of technological advancement. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Nvidia adding to yesterday's gains. It's back above $3 trillion in market cap as we speak. There's the 2% move today. Meta's also higher, as we just told you, on the heels of its Connect conference. Apple, Amazon, Alphabet, all down today. Joining me now to help navigate the tech story with earnings just weeks away now, the Dean of Valuations, Aswath Damodaran, NYU's Stern School of Business. Good to see you again. Welcome back.
Hi, Scott. Glad to be back.
When you look at the multiples of the Mag 7, what do you see today?
I see the fact that these are the companies everybody wants to flock to. But in the last few months, we've had reminders with each of these companies about their weakest links. With Nvidia, it was around the earnings announcement, which is you saw how high expectations have been set. And what looked like a good earnings report turned out to be a disappointment. With Apple, we've lived from upgrade to upgrade now, 16 upgrades, and I don't know why we're surprised. One upgrade, measures up to expectation, the next one doesn't. With Google, we're still waiting for the next big business. They still make so much of their money from the search box. So much as these companies have been winners, they also have weak spots. And I think in the last few months, you see those weak spots sometimes highlighted, which explains why on any given day, 2 of them are up and 2 of them are down.
Despite the numerical gymnastics of valuation multiples and market sentiments, querying whether to engage with Nvidia isn't a conundrum but an opportunity. Embedded within a penetrating future driven by AI, Nvidia emerges as a steward of pioneering innovation. As the market eagerly anticipates TSMC's quarterly revelations, Nvidia's stock, currently trading at an impressive 65 times earnings, beckons investors to join this groundbreaking journey. By the end of the 2020s, Nvidia's annual revenue could touch $794 billion, stealing its ambition of reaching a $10 trillion valuation. As we stand on the precipice of this transformation, Nvidia remains a triumphant narrative of capturing momentum within seismic change, ever evolving, ever flourishing. So, dear viewers, as the stock market sings its harmonious dance of digits and dollars, where do your financial intuitions sway? Share your thoughts and join the exhilarating conversation about Nvidia's thrilling trajectory. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.